Picture this. It's December 2025, and silver prices have just shattered through $77 per ounce. That's not a typo. $77. Just 12 months ago, the same metal was trading at around $30. In less than 1 year, silver has more than doubled in value, leaving gold in the dust and sending shockwaves through global markets. But here's what most people don't know. This isn't just another commodity boom. This is a calculated chess move in a game that could reshape the entire global economy. And at the center of it all is China, quietly accumulating one of the world's most strategic metals while the rest of the world sleeps. Let me take you back to January 1st, 2025. Silver opened the year at a modest $28.92 per troy ounce. Investors were cautious. Analysts were predicting moderate gains, maybe reaching $40 or $50 if conditions aligned perfectly. But nobody, absolutely nobody, predicted what was about to unfold. By October, silver had rocketed to $50. By December, it breached $60, then $70. And now, as we close out 2025, experts are seriously discussing whether silver will hit $100 per ounce in 2026. According to recent surveys, 57% of retail investors believe it will. Even conservative forecasts are placing silver's average 2026 price near $97 per ounce. But this isn't just about numbers on a screen. This is about a fundamental shift in how the world values this metal. For decades, silver lived in gold's shadow, treated as the poor man's gold, a secondary investment at best. Today, silver has emerged as something far more important, a strategic resource that nations are willing to fight over. And the biggest player in this game isn't mining companies or hedge funds. It's the government of China. On December 12th and 13th, 2025, news broke that would change everything. China announced that starting January 1st, 2026, it would impose strict export controls on silver. Not a complete ban, at least not officially, but something perhaps more powerful. A licensing system that would require government approval for every single ounce of silver leaving Chinese borders. The message was unmistakable. Silver is no longer just a commodity in China's eyes. It's a strategic asset, placed in the same category as rare earth elements, which China has used as geopolitical leverage for years. Let's put this in perspective. China doesn't just consume silver, it dominates the global supply chain. When you control 60 to 70% of the world's silver exports, as China effectively does, through its refining and processing capabilities, you control the market. And when you announce that you're restricting those exports, you're essentially telling the world, we decide who gets access to this metal, how much they get, and at what price. The parallels to China's rare earth strategy are impossible to ignore. For those who remember, China wielded its rare earth monopoly like a weapon, using export restrictions to pressure foreign governments and companies. Now, they're applying the same playbook to silver, but why? And why is China doing this now? The answer lies in understanding what silver has become in the 21st century. Silver isn't just for jewelry and coins anymore. In fact, those traditional uses are being dwarfed by something far more significant: industrial demand. And not just any industrial demand, the kind that powers the future. According to the Silver Institute, industrial silver demand hit an all-time high of 680.5 million ounces in 2024. Solar energy alone now accounts for more than 30% of all industrial silver consumption. Every single photovoltaic solar panel requires between 15 and 25 grams of silver. Why? Because silver is the most electrically conductive element on Earth. It's the most thermally efficient metal we have, and its optical reflectivity is unmatched. When sunlight hits a solar panel, silver is what converts that energy into electricity with maximum efficiency. There simply is no substitute that performs as well, and solar is just the beginning. Electric vehicles are the other massive driver of silver demand. A traditional gasoline-powered car uses less than an ounce of silver, but an electric vehicle? Each battery electric vehicle uses approximately 25 to 50 grams of silver, sometimes more. It's in the battery management systems, the power electronics, the charging infrastructure, even the electric motors themselves. As the world transitions away from fossil fuels toward electrification, silver isn't just useful, it's absolutely essential. Grid expansion, 5G networks, consumer electronics, semiconductors, every piece of modern technology depends on silver. The forecasts are staggering. The Silver Institute projects that automotive silver demand will grow at a compound annual rate of 3.4% through 2031. Solar manufacturing continues to expand rapidly. By 2030, experts predict that the solar industry alone could consume between 10,000 and 14,000 metric tons of silver annually, representing up to 41% of global silver supply. Now, here's where things get really interesting and really concerning. While demand for silver is exploding, supply is going in the opposite direction. The global silver market has been in a structural deficit for 5 consecutive years. That means the world is consuming more silver than it's producing. In 2024, the deficit reached 215.3 million ounces. For 2025, even with reduced industrial demand due to economic uncertainty and high prices, experts forecast the deficit will persist at around 63 to 120 million ounces. Cumulatively, the world has now consumed hundreds of millions more ounces of silver than miners have pulled from the ground. You might think, well, can't we just mine more silver? The answer is complicated. Silver mining is incredibly challenging and capital intensive. Most silver isn't even mined as a primary product. It comes as a byproduct of copper, lead, and zinc mining. When prices of those base metals fall, silver production falls too, regardless of silver's own price. New mines take years, sometimes decades, to develop. Environmental regulations, political instability in mining regions, and declining ore grades all make it harder to increase supply quickly. And here's the kicker. China's stockpiles are being drawn down dramatically. Shanghai silver inventories hit a 10-year low in late 2025. Chinese warehouses that once held massive quantities of physical silver are now nearly empty. Where did all that silver go? Some of it was exported. China actually became a massive silver exporter in 2025. Shipping record amounts, including 660 tons in recent months alone. But much of it disappeared into domestic industrial consumption, absorbed by China's massive manufacturing sector. Solar panel production, electric vehicle manufacturing, electronics assembly, all of it is consuming silver at unprecedented rates. So let's connect the dots. China dominates global silver refining and processing. China is the world's largest manufacturer of solar panels and electric vehicles, the 2 biggest drivers of new silver demand. China just announced export controls that will restrict global access to silver starting January 2026. And China is quietly accumulating whatever silver remains available while prices are still, in their view, relatively low. This isn't accidental. This is strategy. And it mirrors exactly what China did with rare earth elements over the past 2 decades. Here's how the playbook works. First, you build domestic refining and processing capacity until you control the supply chain. Second, you become the world's largest consumer of the resource, creating domestic industries that depend on it. Third, you implement export controls, citing national security or resource sovereignty. Fourth, you use your control over supply to pressure foreign companies and governments, forcing them to either move manufacturing to China or pay premium prices for access. China's policy shift reflects a broader strategy of resource sovereignty. By restricting silver exports, China aims to preserve domestic reserves for critical industrial applications while creating leverage over global supply chains. The timing is particularly significant. As the United States and Europe push for domestic clean energy manufacturing and electric vehicle production, they're discovering an uncomfortable truth. They don't control the silver supply chain. They're dependent on China, and that dependence is now being weaponized. Which brings us to the United States and why American policymakers should be losing sleep over this situation. For years, the U.S. treated silver as just another precious metal, something traded by investors and used in industry, but not particularly strategic. That's changing, but perhaps too slowly. In 2025, the U.S. Geological Survey finally added silver to the critical minerals list, acknowledging its importance for national security and economic competitiveness. This marks a paradigm shift, elevating silver from precious metal to strategic resource. But recognition is one thing, action is another. The United States currently produces only about 1,100 tons of silver annually, and domestic production increased by just 6% in 2024. That's a drop in the bucket compared to what America needs. The U.S. has virtually no government silver reserves. Unlike gold, which is stored at Fort Knox and other secure facilities, silver has been largely sold off over the decades. The last strategic stockpiles were depleted long ago. Meanwhile, China reportedly holds 71,000 metric tons of silver reserves, second only to Peru globally. Think about what this means for American industries. Tesla, General Motors, Ford, every American automaker building electric vehicles needs silver. Their battery systems, their charging networks, their power electronics, all require silver. First Solar, Sunrun, and every other American solar company depends on silver for their photovoltaic panels. The Pentagon needs silver for defense systems, semiconductors, and advanced weapons. America's 5G infrastructure rollout requires silver. So does the expansion of the electrical grid to support renewable energy. When China controls access to silver through export licensing, Chinese companies get priority. Chinese manufacturers can secure the silver they need at stable prices. But American companies, they'll have to apply for export licenses from the Chinese government, subject to approval, delays, and potential denial. They'll face higher prices due to restricted supply. They'll struggle to secure long-term contracts. And if geopolitical tensions escalate, say over Taiwan, trade disputes, or technology transfers, China has another lever to pull. They can simply tighten silver exports further, strangling American industries that depend on it. Even Elon Musk, never one to panic over market movements, has voiced concern. When news of China's silver export controls broke, Musk responded publicly saying, "This is not good. Silver is needed for many industrial processes." Coming from someone who runs Tesla, SpaceX, and multiple technology companies, that's significant. Musk understands better than most how critical silver is to modern manufacturing. His gigafactories producing electric vehicles, his solar panel installations through Tesla Energy, his Starlink satellite systems, all depend on consistent access to silver at reasonable prices. If China restricts exports, Musk's costs go up. His supply chains become vulnerable. His competitors in China, meanwhile, face no such constraints. They get preferential access to domestic silver supplies. It's an asymmetric playing field, tilted by government policy rather than market forces. And Musk isn't the only business leader sounding alarms. Across American industry, executives are beginning to realize the strategic vulnerability created by silver dependence on China. But let us zoom out from geopolitics for a moment and talk about what this means for the silver market itself. Because something extraordinary is happening. Silver is breaking out of a 40-year consolidation pattern. For 4 decades, silver has traded in a relatively narrow range, occasionally spiking during crises, but always falling back. The 1980 peak of $50 per ounce, driven by the Hunt brothers' attempt to corner the market, stood as an insurmountable ceiling for decades. Even the 2011 spike to $49 proved temporary. Now, in 2025, silver hasn't just broken through those old highs, it's shattered them. The technical breakout is one thing, but more important is the fundamental shift in how investors and institutions view silver. For the first time, silver is being recognized not as gold's little brother, but as an independent strategic asset with unique industrial demand drivers. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been compressing dramatically. Historically, this ratio often sat at 80 to 1 or even higher. By late 2025, it's fallen to around 40 to 1, meaning silver is outperforming gold on a percentage basis. Analysts are now seriously forecasting silver prices that would have seemed absurd just 2 years ago. Conservative estimates place silver at $65 to $100 through 2026. More aggressive forecasts suggest $133 to $143 by 2027 through 2030. The most bullish analysts are talking about silver exceeding $200 per ounce by 2030 or beyond. Are these forecasts realistic? Maybe. Maybe not. But the fact that serious analysts are even discussing such numbers reflects how dramatically the market has shifted. So what does all this mean for everyday investors? If you're watching this video, you're probably wondering whether you should buy silver, and if so, how? Let me be clear, I'm not giving financial advice, but I can explain what's happening and why investors are paying attention. Silver is now attracting interest from multiple angles. There are the traditional precious metals investors who buy physical silver coins and bars as a hedge against inflation and currency devaluation. The AI boom is in its early stages, and every new data center built to train large language models requires silver in its power systems and cooling infrastructure. Then there's the expansion of 5G and eventually 6G wireless networks. Every cell tower, every base station, every antenna array requires silver for its electrical components. Smart cities, Internet of Things devices, autonomous vehicles, all of these next-generation technologies are silver-intensive. Some analysts estimate that emerging tech sectors could add tens of millions of ounces to annual silver demand within the next 5 years. And here's the kicker. Most of this technology is being built fastest in China. Chinese companies are leading in 5G deployment. Chinese manufacturers dominate solar panel production and electric vehicle sales. Chinese tech firms are investing heavily in AI infrastructure. So not only is China controlling silver supply through export restrictions, they're also consuming the majority of that supply domestically to build the industries of the future. It's a double advantage that compounds over time. So what is America doing about all this? The designation of silver as a critical mineral is a start, but it's mostly symbolic unless followed by concrete action. The U.S. could pursue several strategies. One option is direct government purchases to create a strategic silver reserve, similar to the Strategic Petroleum Reserve. This would ensure that American industries have access to silver even during supply disruptions. Another approach is production subsidies for domestic mining operations, making it economically viable to reopen closed mines and develop new ones within U.S. borders. Tax incentives and streamlined permitting could accelerate this process. A third strategy involves diversifying supply chains away from China. The US could deepen partnerships with silver-producing countries like Mexico, Peru, and Australia, securing long-term purchase agreements that bypass Chinese-controlled refining. America could also invest in domestic refining capacity, so even if ore is imported, the processing happens on US soil. And finally, research into silver substitutes or technologies that use less silver could reduce dependence over time, though this is a long-term solution at best. The problem is that all of these strategies take years to implement. Building a strategic stockpile requires funding and political will. Reopening mines takes capital and regulatory approval. Developing substitutes demands research breakthroughs. Meanwhile, China's export controls start January 1st, 2026, just days away as of this recording. The window for easy solutions has closed. America is now playing catch-up in a game where China has a multi-year head start. It's not just the United States that should be concerned. Europe, Japan, South Korea, India, every industrialized nation depends on silver for their clean energy transitions and technology sectors. Europe has ambitious targets for solar energy and electric vehicle adoption, but European countries produce minimal silver domestically. Japan and South Korea are global leaders in electronics manufacturing, all of which requires silver. India's solar ambitions are among the world's most aggressive, with plans to install hundreds of gigawatts of solar capacity. All of these countries now face the same dilemma. How do you achieve your energy and technology goals when a potential rival controls access to a critical input material? Some nations are already responding. The European Union is exploring strategic partnerships with Latin American silver producers. Japan is investigating silver recycling technologies to recover metal from electronic waste. South Korea is stockpiling silver ahead of potential shortages. But like the United States, these efforts are reactive rather than proactive. They're responses to China's moves rather than independent strategies developed years ago. If we step back and look at the bigger picture, what we're witnessing is a fundamental shift in how resources are controlled in the 21st century. The 20th century saw wars fought over oil, with nations invading each other to secure petroleum supplies. The 21st century's resource conflicts are subtler, but no less significant. They're fought through export controls, supply chain dominance, and strategic stockpiling. And the resources in question aren't just oil. They're rare earths, lithium, cobalt, and increasingly, silver. China has been playing this long game for decades. And while Western nations focused on financial services and consumption, China built the world's manufacturing base. While American companies outsourced production to cut costs, China acquired the knowledge and infrastructure to control entire supply chains. Now, as the world transitions to clean energy and advanced technology, China holds many of the cards. It's not an accident. It's the result of strategic planning and patient execution. The question for the United States and its allies is whether they can adapt quickly enough. Can America rebuild domestic manufacturing and mining capacity? Can Europe secure alternative supply chains? Can these democracies coordinate their responses effectively, or will each nation try to cut individual deals with China, allowing Beijing to play them off against each other? The answers to these questions will shape not just silver markets, but the broader balance of economic and geopolitical power in the coming decades. So here we are. Silver prices are at historic highs. China is implementing export controls. Supply deficits continue unabated. Industrial demand from clean energy and technology keeps growing. And the world is waking up, perhaps too late, to the strategic importance of a metal that most people still think of as just jewelry and coins. What happens next? If China's export controls bite as hard as expected, we could see silver prices accelerate toward $100 or beyond in 2026. American and European companies may struggle to secure supply, slowing their clean energy transitions and giving Chinese competitors an advantage. Alternatively, panic buying and hoarding could create a self-fulfilling prophecy, driving prices even higher in the short term, but eventually spurring enough new mining supply and technological substitution to rebalance markets. Or perhaps something unexpected happens. Maybe trade negotiations lead China to ease restrictions. Maybe a major new silver deposit is discovered and rapidly developed. Maybe technological breakthroughs allow solar panels and electronics to function with dramatically less silver. Markets are unpredictable, and anyone who claims to know exactly what will happen is either lying or delusional. But what we do know is this: silver is no longer just a precious metal. It's a strategic asset at the heart of the industries defining our future. And China, by quietly stockpiling and now controlling access to this critical material, has positioned itself at the center of the global economy for decades to come. The United States and its allies ignored this shift for too long. Now they're scrambling to respond. Whether they succeed or fail will determine not just the price of silver, but the shape of the 21st century world order. The game is being played. The pieces are moving. And silver, That unassuming metal that people once used just to make spoons and coins has become one of the most important resources on the planet. The only question is, who wins? Thank you for watching. If this video opened your eyes to the strategic importance of silver and China's calculated positioning, please give it a thumbs up and subscribe for more deep dives into the geopolitical and economic forces shaping our world. Drop a comment below. Do you think silver will hit $100 in 2026? Is the US doing enough to secure critical materials? I want to hear your thoughts. And remember, in a world where knowledge is power, understanding what's really happening beneath the headlines gives you the edge. See you in the next one.